Alright, hope everyone's doing well. So, just to note, I will be making more videos in the future. And I know I haven't made any recently, and, the whole point behind that, just to keep I don't want to go into detail about all that, but, I'm still trading and doing everything normally. In good time, soon I'll start beginning to post more and more. So, just keep checking back and just keep checking back, and within time I'll begin posting more and more. But again, I apologize for being somewhat absent in making videos, but it doesn't mean I'm not trading or I've stopped. I'm just, I was just taking a little short break from making videos to kind of focus on some certain aspects for myself. So anyways, big things I want to talk about. The biggest thing is, number one, I'm assuming as most everyone who's watched my videos knows, I clearly learned my trading is from Al Brooks. Go to my channel, look at the abouts, and you'll see all that information about the websites. He's in the process of releasing his new course. I don't know how to really explain it other than, I've watched Al for 4 years. I don't know how long. I say 4 years, probably not even 4 years, but, I've been watching Al for a long time. I've been in his trading room for, at least a few years. And I've seen what he's released of his new course, and, I've seen the old course. I've read through his books, and I'd have to say that his new course is unbelievable in terms of he's become, I tip my hat for Al's ability to, the way he's progressed in being able to convey his thoughts, and he's getting better and better at that. So, whole point behind this first part is, if you're not studying Al, don't just watch these videos. If you really want to learn how to trade and you really want to progress, then you need to be studying Al. Don't study me. I do this because, number one, I enjoy it, and, as selfish as it sounds, I make these videos for myself, and it's secondary for other people. Just be completely honest on that. I do these videos because I get a certain enjoyment out of it, and if that helps people, great. Which I hope it does help people. Anyways, though, I don't want to make this video long. So, if you want to learn how to trade, get in Al's, trading room and get access to his new course. It's really that simple. I've never met Al, never spoken to him, other than his website and I guess the chat box in the trading room. But, I don't gain anything whoever's listening to this, I don't gain anything by any means if you listen to what I'm saying and join his course or not. That's up to you. That's just what I would do. So anyways, we'll start with Friday. I haven't really talked a lot. So, first and foremost, I'll point out gold. I think it's kind of interesting. Well, here's, I guess, today, 5 o'clock Central Time. So, we had a bull breakout on the open, and this just shows price action the same for everything. Bull breakout, odds favored second leg, we got our second leg up. When you get a breakout, you think trading, measured move up or down, one way or the other. Assume 60% up, but the reality is when you get bad follow through, bad high one buy, sellers above, your risk is big. Always in long, sure, but the odds favor second leg up. A lot of always in bulls would get out below this bar, certainly below here. So when you start to get 2 or 3 bear bars, you've got to be thinking about the possibility of a test to the bottom. And if you think about it, trading ranges. This whole thing is I guess that's right. My trade station messed up and I think I lost a lot of my defaults, but I guess I didn't. Anyways, trading range, measure move up or down. So, in general, let me go over here. So in general, when you get 2 bars down, you got to think we'll probably test down to here. So a lot of always in bulls get out and expect to retest lower. In general, 50-50 chance you're going to find buyers below here, and 50-50 chance you want. So if we fall below this low, theoretically the bulls get stopped out. However, 50-50 chance you'll find buyers. But here's the problem though. This is strong down, so the odds favor second leg down. So I would certainly not buy. Let me back up. I got to kind of show you this. If this bar would have been a bull bar, closing on its high, I couldn't see myself buying above it. Now clearly the bears got followed through, so it makes the probability of more down higher, and it makes the bull case for buying worse. But even if this was a bull bar, closing up here, I wouldn't buy it. I think we'll get a second leg down. So we got followed through to the downside, which is good for the bears. Next, we need to be thinking about some sort of measured move down. At first, we've got to be thinking. And by the way, Al just completed the measured moves. Well, actually, I got to get credit. Richard, Al's done a lot of the audio, but Richard, I guess the person who does the Brooks Trading Course website, has been doing the editing. And props to him, because I'm sure, I don't know how long it takes to edit videos. I certainly don't edit these videos, in case you haven't noticed. But, I'm not a big tech person, so props to Richard, because I'm sure that takes a long, long time to do. Al just completed his measured move videos. They're online, and they're really good. But anyways, first, expect a breakout of here. And, so expect the first measured move target to be possibly here, or maybe of, let's say these 2 breakout bars. I don't really know. So, but regardless of that, the secondary, big tail on top, probably sellers above, stop up here, maybe here. Bears failed, going sideways, getting a lot of bull bars, maybe always in bulls, always in bears get out, but probably don't have to. The reality is sellers above here, so stop up here. And, we're getting a triangle, you can call it a double top, so a low 2. It doesn't really matter. I still think at a minimum we're going to have to get down to here, and which we did. But you can see we went further below it, and we're starting to bounce. So next you got to think about maybe something like this. A lot of bear bars down. Stop up here first. We'll probably close this gap, because we closed this gap. So a lot of bears will take profits and look to sell higher. But I still think we're going to go lower. And you can see this gap stayed open, so we've got trapped bears. Strong enough breakout here, we'll probably get more down. And we just hit this low. Next target maybe that. But you can see we're starting to get bad follow through, starting to channel down. A 2 bar spike here. So we've already kind of reached that. Maybe a measuring gap. Already reached that. So, wedge bottom. I think it's okay to get out of shorts. Otherwise, definitely get out of shorts here. Expect 2 legs up. We'll probably test up this high. And realistically, we're probably going to close this gap. Ask yourself, Is this going to be a measuring gap that takes us, I don't really know. There's no real, but clearly we tested down at here, we went lower, so the next logical target from this measuring gap is somewhere up here, so it's probably going to get close. So probably always in long, in the sense that we'll get 2 legs up, but again, I think we're just getting up to here. Strong enough for a second leg up. We're getting our second leg up, and you can see trying to close the gap, and so far we have not, but I still think we will. Let's look at the E-mini real quick. Here's Friday. Keep it real simple. We got to break out to the upside, so we've been channeling down for a few days, so have to think about certain leg 1, leg 2s. And most obvious is right here. Get rid of the session break. Leg 1, pull back, leg 2. Maybe leg 1, leg 2 started here. Maybe here. But clearly it doesn't matter. We're getting bad follow through. Looks like trading range price action. Bulls, every time they get a breakout, they get bad follow through. Broke above here, but immediately sold off. Broke above here, immediately sold off. And you can see, when you look at this over here, you have to think, okay, ask yourself this. Channels convert to trading ranges. Bears see a channel, they expect the first reversal down to fail. So as we're channeling up, you have bears thinking, okay, this looks weak. So where could where's a logical stop for the bears? I think it's here. So if a bear, maybe they sell below here and they put their stop up here. Okay? What are the odds that they, or better yet, I just want to see something. So maybe they, I think it's kind of interesting. Where I'm getting at is, if you take the middle of this range and put your stop up here, it basically is at 50-50. So, the risk reward is equal for the bulls who are buying in here, stop down here, targeting up here, and the bears selling in here, stop up here, target down here. So it's very neutral. And as for, the bulls keep trying and they keep failing, they're trying again, they're trying to get a micro channel, but again, failing. They got the 60-minute moving average up here. The odds become pretty good for the bears to sell, stop up here. So, and if you don't want to do that, I think always in long, but a lot of bears will get out here. The bulls have just had too many attempts up. They had a spike up, multiple pushes up, nested wedge. It's a nested wedge. Many ways to draw it. So we may have to test down. And we're at obvious resistance, 60-minute moving average. 3 bars down, I think bulls definitely get out. Aggressive bears start selling, and we're just getting a lot of bear bars. So it's kind of like one of those, it's kind of like a parabolic wedge. These are biclimaxes, biclimax, another biclimax, another biclimax. Eventually, if the bulls keep trying and failing, we've got to go the other way. So a lot of bear bars down, some micro channel, first up will fail. Maybe stop up here. I'd probably, by this point, probably your stop's up here. Again, the bears just not really, the bulls and bears not doing what they should be doing. So it looks like we'll develop into a trading range. You've got to be thinking open of the day, a likely target. So open today is this bar is where the session break is, so it's right here. And think about right now. Say, okay, in general, there's a 20% chance that bar 1's the higher low of the day. And if you think about why 20%, it's because in general, the higher low of the day, the first bar sets either the high or the low of the day 1 day out of the week. Now, once you get to 12 bars, the first hour, I would say 50-50, 50% of the time, the market, and I might be off on that, but it's close to 50. Usually one extreme is set. So, and maybe that's within the first 2 hours. So let me put it this way. By 10:30, which would be bar 24, so the 2-hour mark of the day for Central Time, by 10:30, there's probably, I'd say, well above 50, probably a 60% chance you've either seen the high or low of the day. And so ask yourself right now, what's more likely, that we've seen the high of the day or the low of the day? So if you had to pick, would you buy at the market, stop down here, or would you sell at the market? Would you sell at the market, stop up here, target down here? I'd sell. And you can see it's not a good vibe. Bears sold it, and breaking out. So the bears are trying to get stronger, but again, we're not really. It's a lot of bear bars, but it's not strong. I wouldn't be buying, but I do think that bulls will make money. So I think this gap will close, and you can see it didn't. So you have to be thinking about the possibility that the move's getting stronger. We may get a measured move of some sort. But again, looks like a leg in a trading range, but it's a very tight channel. First left should fail. We're trying to break below this low. I still think we're going to get below the low. Lots of bull bars. This is always interesting when this happens. Are we always in long on bar 3? Well, I think we are, in the sense that, I don't know. That's a tough call, because the problem is this is so tight that, it's the 50% question. Bears will sell here, put their stop up here, believing correctly that they've got a 60% chance of price going down to here. Bulls who buy here, put their stop here, probably will not. They probably won't get a 1-to-1. So, let me put it this way. I think that always in bulls probably get out above here. If they didn't get out on this close, it's really not that simple. Maybe I certainly would get out of longs. I would certainly get out of shorts if this bar were close to its high, but it didn't. And that tells me that, the bears, the bulls needed really one more bar closing on its high to convince everyone the market was always in short. That it was always in long. So, I'm not convinced it's always in long yet, and I think we're going to get some sort of second leg down. Also, we didn't test this close, so we're probably going to have to retest it. It's kind of like when I know I can find one. Yeah, I don't really see what I'm looking for, but no. In any case, it's, when you get a sell to close, usually if the market rallies, you've got to retest it. Anyways, clearly, bears got their second leg, but it was strong enough. We're probably going to get a little more down. Maybe we'll get down to here. So, but you've also got to think about possible exhaustion. So, technically, this is a higher low major trend reversal, bear trend line break to a higher low. First left should fail. Now we're getting again, a higher low major trend reversal. Strong enough breakout for a second leg down, probably likely. Here, did the bulls get out? Did the bears get out? I don't know. They can, but I still think we have to go more sideways and probably a minor reversal. Now we're getting 3 pushes down. We got a second leg down, which was likely. Holding above this low, so another higher low major trend reversal. You can call it whatever you want to call it. We tried to bottom here, broke below, we're trying to bottom again. We'll probably get up to here, probably get up to this close because it was reasonable to buy up here. So I think a lot of always in bulls get out. they definitely get out here. I think, excuse me, a lot of always in bears get out here. 3 bars up, probably always in long. So buy for any reason, stop down here. And, but again, we may have to go sideways for a while. And theoretically, bears will still see it as always in short unless we get up here. So, theoretically, the bears have to get short again. But the problem is 3 bars up, probably going to get a second leg up. We've had, this sell climax. It's good, but this rally looks like something within a trading range. Just look at the day as a whole. When you take away these 2 bars and you really have, find 1 bar with good follow through. You really, every time we go below something, price gets bought. So it's really not a great short. You've got to ask yourself, we've been going sideways for almost 20 bars. Stops up here. We may easily get test up to here. It's just the math's not great. So trying to go sideways, got the bull breakout, got another breakout bar, but tail on top, another tail. We're at targets. Back at this close, big tail. This tail is 1 point tall, late in the day. Stop down here. I think the bears will make money selling above. So, again, we're at the 6-minute moving average. Not that simple to buy up here. Then we sold off, but again, first reversal down should fail. Tested up into the day. I'll quickly go over these 2 days, and then I'll wrap this video up. So, let me just kind of go like this. Well, here I'll do it like this. Okay, so this is the 30th of November. Trading range, we gapped up. You've got to think about the gap closing. So bar 1, 2, and 3, trading range bars, probably sellers above. Always in long, yes, gap because of the gap, but no reason to buy. Bar 2, probably always in short. I'm sorry, 850, probably always in short. 855, clearly always in short. Stop up here. First reversal up should fail. And, again, I still think stop up here. Another sell-off. More down. Possible parabolic wedge bottom. First push, second push, third push. Or 1, 2, 3. Really doesn't matter. But you've got to ask yourself, I think this gap's going to close. So, bears want some sort of measure move down. Probably won't get it. Then we get this bad follow through. It's very close to yesterday's close. I think always in bears get out. And, aggressive bulls buy, but probably minor reversal. Tight enough channel for we probably will have to retest down here. So, testing up, but again, 50% pullback here, 50%, bad follow through. I think bulls get out, aggressive bears start selling. And clearly, a surprise breakout, probably at least a little more down. Definitely getting, well, more likely than not, we're going to test down here. But look what happened. Bad follow through. So, again, big tail on top. So probably sellers above, stop up here and at least a second leg down. I don't think this reversal attempt is strong enough to erase this. And, tails on bottom, but we're getting a lot of bear bars. And just broke below the low. But again, I'm thinking trading range, maybe a weak channel. I still think bulls will make money buying down here. I think a lot of bears get out above and look to sell higher. Aggressive bulls, do they buy? Well, I don't know. Micro channel, so I really don't like to do that. But I think it's okay to buy. And this looks, you've got to ask yourself, so is this a wedge bear flag, or are we gonna get a bull breakout of the bear flag? To me, we're getting a lot of bull bars, but I don't like how this is looking. I think that personally, I think the bears will make money selling. It's just the bulls are not doing enough. While the pullback's lasting a long time, I think of it this way. Right now, if someone sells up in here, I think the odds favor a retest down than up here. So, and that's at this moment. This just doesn't look that strong. And that, now I'm feeling much more confident that we'll retest down and get up here. Starting to go sideways. Broke the channel. So tight channel, first down should fail. Now we got a second entry. Bears will sell. Possible stop up here. I'd put it up here. And clearly we broke the low, but now, look what happened every time we broke below a low. So 3 pushes down. Big tail on bottom. So I still think, better to look to take profits down here. And, again, we'll probably get a second leg down, which we did. So, climactic, best looking bear bars of this move, sideways for a long time. Maybe possible leg 1, leg 2, measure move projections. And look what happened. So, but anyways, my point was, I think it's kind of interesting. Al talks again a lot about this in the new trading course. So, very often when price goes sideways, you get a leg 1, price goes sideways, and leg 2 starts when there's breakouts. So maybe it started here. Well, we may tight enough that we may have to test lower, and multiple pushes down, 3 pushes down. As soon as we broke below, we reversed up. So bears definitely get out above. Aggressive bulls buy, stop down here. Probably close enough to the leg 1, leg 2 that it's satisfied a lot of traders. And clearly we're going up. First down should fail. But getting late in the day, kind of early for a buy the close rally. Just do the math. If the buy the close rally starts at 14.15, that means that for it to last until the close, it's got to last 12 bars. And normally you don't get buy the close rallies that last 12 bars, especially when you get tails like this. So the bears, I think a lot of always and bulls get out right here. Even though we may, first down should fail, there's always the risk of sell-off. And, again, bulls had a chance to buy above. They failed. Bears see this as a pullback, and look what happened. So this is why you have to be careful about buying high in a pullback. It's kind of like buying up in here. I see it as the same. I know Al says that a lot of times when you get a buy the close rally, it's best to get out below bear bar and trail a stop below each bar. But, in which I certainly agree, and I do that very often. To me, it's a bull flag. It's a bear flag. The bulls are trying, and, in part, the bears know that the bulls aren't going to risk a stop down to here because the day's almost over. So, if the bulls start to fail, then the bears know that if they start selling, theoretically their stop's still up here. And if you do the math, selling even on a stop below here gives you 1-to-1. Even if you, sell this high or sell this close, sell on a stop, I don't know, below here. But regardless, it's like this. If the move's going up and it's weakening, at some point bears sell. Confusion, not an easy day. At least not an easy open for swing trading. So, I guess this was Thursday, if I'm correct. Yeah, it was. So, probably always in short from yesterday, but I think we're going to rally. But we got to break above the moving average, Strong enough breakout second leg down. Good signal bar, always in bears. Definitely get out. Aggressive bulls buy. Probably always in long on the close of this bar. Follow through good, but look at this bar. Big tail on top. Could not close above the moving average. Holding in this tight channel, I think that's a problem. Now you got to question, the bulls. Why they had the signal bar was already big, and why did they scalp out? The bulls need to break out above the moving average, and if they don't get it, then we could have a problem. Bulls tried again, second interest short, below the moving average. I think a lot of always in bulls, I think they get out here. Aggressive bears sell. Some bulls hold below their stop below here. I would not do that. So probably back to always in short, but again, not that clear. And now it's clear they're always in short, but you got a question. Probably buyers down here and a deep pullback. And we may very easily test up to here because it was reasonable to buy here. So you have bulls buying, maybe buying 2-3 points lower, 4 points lower, getting out of break even. So I think a lot of bears get out here. Maybe do they sell again here? I think they can, but strong enough breakout, maybe you might get a small second leg up. But again, looks like a bear flag. The bulls just aren't doing enough. They tried to break above, but big tail, they're not. This isn't good. Get possible give up bar. So, I think a lot of bears are always in bears that got out and did not sell here. And this kind of was 50% trades. Get a bull breakout, 50% pullback. So bulls are buying, theoretically stop down here, betting price gets up here before stops them out. Bears are starting to sell again, possible stop up here. And as weak as this looks, it's tight enough for the first reversal down. First reversal up probably fail. And look what happens. Stops traders out and channels down. Then we get a stronger breakout. So probable second leg up, second leg down likely. Sorry, my voice is getting a little tired. But tight channel. Again, first reversal up should fail. Stop up here. So you're in a bear channel, and bulls are going to start buying 2, 3, 4 points below the most recent low. So you got to understand that bears are looking to take profits, and broke below again. So the channel's getting stronger, but what's your expectation? I still think bulls will make money buying this low. So the biggest problem I have with being short down here is just think about the math here. Okay, so if a bull buys this low, and Al talks about this a lot, bulls buy here 2192.5, and maybe they buy 4 points lower. So what's 4 points lower? 2192. So what? 2188.5. So let's say we set a limit order. We see price breaking out. We say, it's kind of strong. Tell you what, I'm going to set a limit order at 2188.5, 4 points below this low. And we got filled on this bar. So 2188.5's around here. So what we're going to do is we're going to buy here, put our stop 4 points lower, and set a target at 4 points above, and bet that the bulls will make money before the bears. And I think that's what immediately happened here. You have bears who understand that, and you have bears who theoretically will sell on a stop below. And if they sell on a stop below, they need 2188 even to make a profit. And they made 4 points and they took the profit. So starting to go sideways. And also a lot of bears, if they buy 4 points lower, 2188 even, plenty of them will take profits, 2188.5. So theoretically, I guess if a trader was really smart and willing to do it, they might, I don't know, some bulls will buy, doing the 1-to-1, risk 4 points to make 4 points. Some bulls will buy that target, betting the first reversal up will fail, scalp out for 1 point, and again buy the same price level and go for 4 points. But regardless, I think this gap's going to close. Came close, looks like came within 2 ticks, and and it did 3 ticks actually, and that happens a lot. But still, I think the same thing. The gap should close. And look what happened. You know, that's one issue with point something out real quick. Nope, did it wrong. There we go. That's one problem with. By the way, this is, if you think about it, to me this is bulls defending their stop. So theoretical bulls, they buy 4 points below this low, stop down here. They scale in 2 points lower. You know, maybe doubling their position with the same stop. But this happens a lot where you get price. You know, price doesn't close the gap until the very end of the day, but it's all math. And the odds favor a second leg down. Okay, so it's getting late here, and I'm honestly kind of getting tired of talking. My voice is it's starting to get dry and hurting. So hope this helps, and I'll be making more videos in the future. Comment below if you have any questions, and hope everyone has a good trading week. Thanks.